All right, guys and gals, this is Blake Morrow. You were listening to the Morning Edge webinar. I want to welcome you all back. Okay, so we're going to get started on our morning analysis, but let me just make a couple of quick comments from some of the comments that you guys have written in. I did, and I'm going to try to get to all your comments later today. But there's a couple just regarding this conversation we were just having. Charlie said the problem with more fiscal policy is deficit spending is too high. 700 billion in growing deficit in the U.S. is too little fiscal stimulus? Question mark. Yeah, right. Dude, I understand. I just duded you, by the way. I totally understand that. And I don't have the answers, Charlie. I don't. But what I'm saying is monetary policy isn't working, so what do you do now? That's the question. You know, if it's not fiscal, then is it structural? And if it's structural, how do how do you make those reforms? All right. Nigel says conversations such as this that we had about, the markets, is good, is all good. If nothing else, they make us stop and think a little bit more than we probably already should. So thank you. And Jonas, one last comment I want to read here really quick. There's reasons why markets are doing what they've been doing since May 2015. There's a reason why markets went up from 2009. When things change the market, change in the market, there's something going on. Well, that's exactly it. I mean, if you really take a step back, okay, if you really take a step back and you look at the markets and you go, okay, this is what they've done since 2008, 2009, and since 2015 we've been rounding this top. Why is that? Well, you're really coming to the end of a very massive, stimulus cycle in the markets, and what we found even yesterday is the ECB is probably unwilling to do any more stimulus from here on out. So that just further reinforces the fact that, after all of the stimulus, we're probably going to pull back a little bit now that central banks are, for the most part, arguably done. So there's a good saying: don't fight the Fed. Don't fight the Fed. It's been around since I've been trading and many years before I got here. All right, don't fight the Fed. The Fed was stimulating. Every time we thought they were done, the market would roll over, then they'd re-engage again. It would take us higher. The Fed's done with quantitative easing. They're actually raising rates. So yes, the markets are indeed now starting to roll over. And the fact of the matter is, as they are done stimulating the economy, we are probably slowly rolling over. And that's why you're seeing that. And now that we're aware that the European Central Bank probably is too, and the BOJ probably is as well. They both announced that they're going to actually see monetary policy work through the markets. That is going to weigh on equity markets moving forward. So again, I think that the scary thing is that the market is completely immune to what the ECB is doing, and the BOJ, and probably the Fed too, which is scary all the way around. All right, let's talk about the markets themselves. All right, so I bought the euro dollar this morning. Just so you guys know, I started buying it. I picked it up at 108 or 110, sorry, 84. So I'm only up 17 pips right now. Okay, I really want to buy it at 110.65. That's ultimately the price, because look, that's the breakout point, right? Do you remember our little dotted line from yesterday? That's the breakout point. That's the 38% retracement. That's where I want to be on the long side ultimately. I already started buying a little bit down here, and I'll buy a little bit more if we can get down there today. All right, so 110.65 is support. Okay. Now here's the other thing I want to ask you. Okay, for those of you that are, if those of you guys that are normal listeners to the Morning Edge or any of these webinars, when you get a 38% retracement, sorry, I got up extra early this morning. My dogs were the reason why. But when we get a 38% retracement, if that is it, and we hold the 38% retracement, what does that typically mean? It's a continuation. Right. So if we, okay, so let me just draw this on a blank chart. Let me see if I can get a chart that would be, I can make blank. Here, I'm gonna do this. Drawing, remove lines. Okay. Okay, let's go back. Let's do this. All right. So when you're looking at a market, all right, and it goes up aggressively, when you get a pullback that's only a 38% retracement, okay, and let's like goes like that. Okay, so when you get a 38% retracement, typically that is a sign that there's a strong possibility of a continuation. All right, when it's a 38% retracement. Okay, when you get a 50% retracement, okay, the risk or the probabilities are more like 50% that you get a continuation, or 50% that you start to get a consolidation, right? Same with the 618. You get to the 618, you can still get a continuation, but you can also get a consolidation. Once you get to the 786, okay, once you get to a 78% retracement, it tends to be a consolidation. So when you go, boom, boom, 78%, then you start to consolidate, all right? And then you form some sort of triangle or consolidation pattern. But when you're at a 38% retracement, like you see here in the euro, if we stop here and we start going up today, then we're probably going to continue higher. And you can look at it like an A, B, C, D type of move. So, when I look at the euro dollar, keep in mind this is a very strong move. Okay, so if we get a move like this, and let's just say we stop, and let's just say, argument's sake, for argument's sake, we stop here. Okay, then what you're probably going to see is a continuation pattern, which means that we're probably heading towards 114 again. Okay. So you got to watch it today, because if we, here, let's grab that. I'm trying to grab this line here. Okay. So we're probably heading back up to 114 or maybe even higher. If this 38% retracement holds, that's why it's so important today. That's why I'm willing to buy it down here. I think the risk is fairly limited at this point. I don't think you have to risk much more than the 50% retracement if you're going to be on the long side down here. So anyway, the 38% is really important. I don't think we're going to bust into new highs today. Just so you all are aware, I don't think that's really doable today. I think today we'll find sellers, even if we bounce here. I think we'll find sellers right here. Okay, so at 111. What was it, 111.70, 111.60, somewhere in that neighborhood. So if we find some support down here, we're not going to go too far today, unless the market goes absolutely crazy. I mean, hell, who knows? I mean, based from the volatility yesterday, I mean, hell, the Dow might be down 200 points today by the end of the day. Who knows? So if that's the case, the euro might actually hit new highs. But I think 111.70 should cap us for the day. It's not great resistance, but I don't think we're getting much above that today. Okay, we are in a range environment. Now everybody was really shocked when they heard my analysis yesterday, and I said, if we get above 114, I think we're going to like 118 or 120. I'm completely serious about that. It's not like I'm a big euro bull, but the fact of the matter is we had a really great reaction yesterday. When I say great reaction, guys, here, let's get rid of these fibs real quick. We came down and we retested this broken trend line yesterday. Here, let's go over to okay. This is the longer term trend line we've been focused on. This is the daily chart. I don't want to zoom that far out. I don't like that. Okay, here's that long-term trend line. We stopped here, we bounced here, we came down, and we basically tested it and vaulted right off of that. That's huge. And if we break the 114 level, I think we're going right up to 118 to 120. All right? And I'm not saying we're going there for sure, because we need to get above 114, but it's after yesterday's price action, I don't doubt it. I didn't think it before, but yesterday's price action, and it's not just the price action. What was it? One of the there's something that really provoked me to say that yesterday, and it's when the ECB said we're basically done. We've done what we're going to do, and we're done. All right. That to me says, "Oh, that's what made the euro rally." You know, the euro, the ECB delivered, and then on top of that, they basically said, "Hey, you know, we're done with this." So, with easing, and they're probably going to follow the route of the BOJ for a while and say, you know, okay, well, we're going to let, you know, what we've done work through the economy and see what the results are now. They're going to be on wait and see for a while. That could produce a move up here, especially next week with the Fed. If the Fed, you know, doesn't raise rates, relatively dovish, probably going a lot higher. Okay, let's go over to the pound. Now the pound, this sucker's strong, baby. It's really strong. You notice we're climbing above that we're climbing above that 143, and we're climbing above that resistance. Okay, so the pound, in my opinion, looks very possible that we stage a rally here. Very possible. If the euro dollar comes screaming back, the pound should break into new highs. That would be my initial thought. Okay. Now what we should do is we should take this most recent high. Okay. Go to the lows. Figure out where resistance is. So we should have resistance today at 143.50, but that gap right there still needs to get filled at 144. And if I was short the pound, I would be really concerned right now. I'd be really concerned that this thing is, you know, extremely strong. All right. So the 143.50, we're gonna mark that as resistance today. Actually, two levels of resistance, right? 143, 144. Because 144, if you don't know why, is that's where we fill this gap, right? So we closed at 144.04, so that's 144. It's possible we fill that gap. Here, let me grab this right now. It's possible we filled that gap today if the euro stages a rally and if the pound starts to break out. Okay. I don't know if the 618 is going to stop us today. Here, I'm gonna do this. But those are two resistance levels. Okay. Now support for the pound. To me it seems pretty easy where support is, and you know, tell me if you guys see anything different. But that's support right there. So support is going to be at 142.40 for now. And you know, we're threatening to go from a range environment to bullish. And when I say bullish, it's going to be just near-term bullish. What is that drawing? Let me remove that. If we turn bullish, it's just because we're going to go bullish out of this trend line, and we're going to just turn bullish in the near term until we hit some sort of resistance, and we'll go back to range. But the cable is threatening. It is threatening. Okay. Let's go over to the Swissy. Now, the Swissy had a massive, massive rejection yesterday. Big, big rejection. I personally am going to be really excited if the Swissy drops down to 95 cents or so. Sorry, I mean to yawn on you guys. If we can drop down to here, I'm going to be so excited about getting long down here. I can't even tell you. It's like super exciting to me. You know, if we can make it down there. But that's nowhere near where we're at right now, and that has nothing to do with today. But this was really a big deal. I mean, we broke above the 618, false breakout, reversed really hard. So that means that resistance should be like right where we're at, really. I mean, resistance is pretty much right here. Resistance is futile. I'm going to say 99 cents today. And keep in mind, we only have Canadian data today. We don't have. I think we have one minor U.S. piece of data coming out. We have import prices, but that's not gonna really affect the market much. Um, okay, so there's a Swissy resistance support. Support is going to be right here. Obviously, we just have to mark the overnight lows, which is what is that? Oh, that comes from way over here. I can remove that. Okay, let me try something. Hi. Huh. That is the 618 retracement. Boy, that's important support. That's more important than I thought it would be. 9810, important support. 0.9810. Because that's the 618. All right, we are in a range. Dollar yen. I'm still short the dollar yen. My cost average is, I mean, I'm out of the money 30 pips, but I'm still, and just so you guys know, I covered some of my dollar yen yesterday. Not a lot of it. I covered like a fifth of my position. So when we were down here, I'm like, okay, I'll take a little off the table. I haven't added it back. It's just, it's obviously very choppy right now. And it's all it did is it rallied back because equities rallied back. But do you see what equities are doing right now? Equities are near its highs, but the dollar yen isn't up here. It's right here. Again, that's a divergence of the yen pair. So all the dollar yen really needs at this point, the dollar yen just needs, the stock market to really roll over. And if it does, it's if it does, then the dollar yen is going to be a really nice short at some point. We didn't quite hit a 786 retracement there. I mean, I'm going to mark up like 114 because it's like 114.50, as you guys know. But this is going to be support. Support should be fairly easy here. You can see this. You can see this here. Let me highlight it really quick. There. Okay. A lot of traction right around there. So I think this will be great support today. So 1330, right? Now that's it. Let's just assume that the market doesn't roll over and completely crap the bed, because if it does, then we're going to go lower than 1330. But 1330 should be some minor support today. I would say resistance is 114 and 114.50. I mean, I hate to be so vague, but 114.50. Okay. We are still bearish. Now, if you don't know why we're bearish, just because we're head, shoulder, shoulder, we're just consolidating, before the next leg lower, in my opinion. That's why I'm short the yen, or short the dollar yen. Okay. Let's go. Let's do the Canadian. Now we have Canadian employment. I'm going to tell you right now that 132 is massive support. I would not put it past the market to dip its toe below 132 today. We are expecting Canada to create 10,000 jobs. We're expecting Canada's unemployment rate to stay at 7.2%. If Canada creates more than 10,000 jobs, we're going to dip our toe below 132. I think 132 is going to be important, because if we break this support right here at 3230, which has been there's been the 786, 3230. If we break through this support, it's going to be more of a stop loss run, in my opinion. Okay, but we can dip to 132 today. I'm going to write down two support levels: 132, 132.30. Okay. Now resistance. Let's say Canada loses jobs today, which I don't think is going to be the case. But let's say Canada's jobs, picture does not look good. Okay, that should be resistance today. So that resistance comes in at, let's just, let's assume we have a bad job, because we have a jobs report, so we could definitely make our way up here. That'd be 133.50. Okay, will be resistance on the way up. And we are in a range, but we're threatening to turn bearish. I mean, if we drop below 132 and we hold below 132, I'm bailing. Just so you know, I'm getting out of all my Canadian currency. I'm going to take a loss. If we get below 132 today and we hold below it, I got to bail. But and we will turn into a bearish trend. We're obviously going to be covering that in about 34 minutes. So, all right, guys, when I come back, we're going to do the Kiwi, the Aussie dollar index, any other currencies out there we can find. So don't go anywhere. Be right back. All right, guys and gals, this is Blake Morrow. You are listening to the Morning Edge webinar. I want to welcome you all back. So let's get to the Kiwi, the Aussie dollar index, all that. Let's go over to the Kiwi. All right, so here's the Kiwi dollar. I still have a short in the Kiwi. I'm not worried about it. The one thing that does concern me a little bit is that I think the euro can rally, which if the euro continues to rally, it could drag up the Kiwi dollar, and that's my biggest concern at this point. But while we're below, I'm still sitting and I'm down 6 pips right now. So I'm not, like I said, I'm not too terribly worried about it. But while we stay below 67.10, I'm just trying to grab the end of this pen here. There we go. While we stay below 67.10, that's resistance support. It's going to be down here at 66.15, 66, whatever the low is there, 17. I'll write down 15, but 0.6615, and resistance is 0.6710. Okay, and if you want to be on the short side, this is probably the place to do it. I think the Kiwi probably is a better short against crosses, like buying the pound New Zealand, buying the euro New Zealand, things like that. You probably want to stay away from the New Zealand Canadian, because of the Canadian jobs report coming up. But I'm just saying that the New Zealand dollar, the biggest issue that I see about being on the short side is if the euro does rally, then this Kiwi might grind back up towards 68 cents. Same with the cable. If the cable breaks, 143 with any type of force, then it might drag the Kiwi up. All right. And now let's take a look at the Aussie. So the Aussie is back right up to its critical resistance, all right, which is 75.30, right? And you guys know why 75.30 is a big deal. You know why we stopped here the other day, and it stopped there before we drew the line before. But if you don't know why, you have to go all the way out to a weekly chart, and you got to go to the lows of 2000. Well, not the lows of 2015, but lows of April 2015. That's previous support. It is now acting as current resistance. One of the things that we could be in, too, is we can end up being in a big range here in the Aussie, especially if we can't scale above the 75.30. But 75.30 is big resistance, in my opinion. Okay, it's bullish right now, but we are right up against resistance. I mean, in order for the Aussie to continue higher, we have to break out here. We have to. Now, one of the other things about the Aussie, which I'm happy about, because I bought the Aussie New Zealand yesterday at 111.65 and 111.57 or something like that. So the Aussie New Zealand's back up again. One of the things about the Aussie, though, to take a look at the higher lows, higher low, higher low, higher low. Okay, so I mean, support will come in right around here. Like, let's call it 74.40 right now. Okay, it's not great support, but it is support. Let's go over to the dollar. Okay, here's the dollar index. What a rejection yesterday, huh? Spike high right into that dotted line that we had there, right? Um, it just, I mean, bam. Uh, what to do? What to do? I mean, we hit our 786 retracement, so that's support right now. Let's write that down for the dollar. That is definitely support. That comes in at 95, basically 96. I mean, 96, 95, 95. I'll just write 96. That's pretty key support, I would say. Resistance now, right there. I don't want that big of a line. 96.85 will be a resistance. All right, and we are in a range environment here. Let's go take a look at the peso. So the peso, it got close. I mean, it was cruising up here, and it got close to 18 again. And you can see, well, we dipped, I guess, a little further yesterday. So we were right down 1870, and or 1770 and 18. We exceeded that yesterday to 1761. And I think I mentioned this to you guys yesterday. I'm like, hey, if you want to buy the U.S. dollar Mexican peso down here around 1750, I could see it. It is 618 down here, and I'm going to write that down. I'm going to write down 18. I don't, and personally, I'm not interested in buying the U.S. dollar Mexican peso. I'd rather short it up here. But if you're short, you really have to be careful as we approach the 1754. 1754. We'll get down there if the equity markets continue to rally. If the equity markets roll over from here, we'll probably get back up to challenge the 18. Here's the Norwegian krona. By the way, the Citigroup wrote a big opinion piece about the U.S. dollar Norwegian krona today. The Norges Central Bank is next week, their rate decision. The market is expecting a quarter basis point cut, but it's factored in. So you got to watch the U.S. dollar Norwegian krona here. If we break this 842 level, that's going to be extremely bearish for the U.S. dollar Norwegian krona, right? And that comes in at 842. I'm going to write it just because I think it's such an important level, okay, of support, because it's a massive trend line. I mean, look at how massive trend line that's from 2014, roughly. Here, I'm going to just do it like that, okay. I mean, really, really big trend line coming in. 840. Look at how much air is beneath it too, if it actually breaks. So U.S. dollar, Norwegian krona, support 8.42. That's really key support. Resistance is the high there, 860. Okay, we've been in a range for the last several months, but we're in a very, very strong uptrend. But we've been, for the last since December, we've just been bebopping around. But if we break below this this trend line, it's going to be bearish. All right, and think about that. If the euro decides it wants to rally, that can be hit, okay, and broken. Here's the Swedish krona. Ooh, I didn't even notice this yesterday. Oops. Interesting. So if the euro breaks higher, that's going to send that Swedish krona lower. 832. We need to start paying attention to these Nordic currencies, guys. All right, down to 842, but it's not great resistance, but it's there. Just keep an eye on these Nordic currencies. They haven't moved in a while, and because they haven't moved in a while, they're probably at risk to moving. You know what I mean? That there's now an increased risk that they're going to start moving here soon. So just keep an eye on these Nordic currencies. I think we got to watch them, because if they start breaking through these supports, if the euro stages a rally and breaks above, like let's say back at 111.50 or so, it could send those Nordic currencies down. Also keeping in mind the Norges central bank of next week. All right, so here I'm going to leave that up for you right here, and let me start answering some questions. I'm going to go all the way back, so just bear with me. Okay.